You're listening to The Money Hour with your host, Tina Mitchell. Sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome back to The Money Hour with your host and mortgage expert, Tina Mitchell, right here at 1150 a.m. KKNW, the June 11th show. I'm committed to providing you the knowledge needed to be successful in every area regarding your finances. Knowledge is power, and that's what you'll receive by listening to the show. If you're hearing my show at a different time or day, you are listening to a rebroadcast, but you can always call the show at 1-855-400-1150 or online at themoneyhour.com. Ask any guests that I have, questions that you have. And actually, Greg, there was quite a few questions that came in for you the last time that you were in studio. So I've got Greg here again, Greg Nunn with Gregory S. Nunn and Company. We're going to talk about innocent spouse relief. Greg, thanks for coming back. And it's the first time I didn't even know what innocent spouse relief was until I started reading up a little bit on it.
Yeah, well, thank you for having me again. And I'm sure listeners out there, you're going, innocent spouse relief. Like, what the heck is that, right?
Yeah, they're going to know.
You're going to know today.
And a little background on Greg. Again, Greg Nunn is founder and principal of Nunn Better Tax Resolution in Redmond, Washington, the first firm of tax resolution specialists in Washington State. His passion is helping people that find themselves in a predicament with the IRS due to failing to file their tax returns and or not paying what the IRS claims that they owe. He represents these troubled taxpayers vigorously before the IRS. His practice also provides tax preparation and tax planning for individuals and businesses. Gregory is a licensed CPA in the state of Washington and has been in the industry for over 30 years. He's a member of the American Society of Tax Problem Solvers, the premier associate in professionals helping troubled taxpayers, and he has received the Top Practitioner Award for the American Society of Tax Problem Solvers. He is also a certified tax resolution specialist. Greg has also now just published his book titled Solve Your Tax Problems Now. So Greg, thanks again for coming in studio. I'm really excited to have this conversation with you, and I think it's be an interesting conversation to share with our listeners. So let's get right into it. What is innocent spouse relief?
Innocent spouse relief, think of it this way. It's getting relief when you file a joint tax return, because when we file a joint tax return, we are jointly and severally liable for that tax. Mm-hmm. So a situation can occur where maybe there's tax owed, and the IRS will collect that tax from whichever party they can. They really don't care if it's the husband or the wife. They're going to come collect the tax.
It is the IRS.
The IRS. And there can be those situations where really it's the fault of one spouse versus the other. And so there are some relief provisions that help the innocent spouse, the one that's injured.
So how does that come about, Greg?
You know, there's two ways it comes about. Mm-hmm. One is there is an audit of their tax return, and there's an understatement of the tax, meaning, well, you reported that you had $50,000 in charitable contributions as an example.
Okay.
As an example. And the IRS comes in and goes, you can only document 10,000 of that. So that's where there was an understatement of tax because they took too high of a deduction. Mm-hmm. And now the IRS is going, okay, you guys owe us more money. And it could be that one spouse or another was the one that perpetuated that incorrect amount.
Makes sense. So what types of innocent spouse reliefs are actually available, Greg?
There's three primary ones.
Okay.
And what's interesting is the IRS calls this innocent spouse relief. But to me, it's really joint tax liability relief, because here are the three different ones.
Okay.
Under innocent spouse, there's one called innocent spouse relief. Confusing, yes. There's a second one called separation of liability. And then there's equitable relief.
Okay.
The innocent spouse relief and the separation of liability relate to that understatement of tax. That is, there was an understatement of tax in the return, so it means there had to have been an audit or some discovery by the IRS that you reported incorrect information in the tax return.
Got it.
The equitable relief is exclusively, well, not exclusively, but primarily for an underpayment of tax. That is, you owe $30,000, but you
just
weren't
can't pay
you
it.
can't pay it.
Got it.
So it's an understatement, and then there's the underpayment.
Okay.
Two different things.
Okay. So can you explain further on what these types of relief really mean?
Let's talk best case scenario.
Okay.
As an example for equitable relief, there could be a situation again where, well, I've seen some pretty big ones, but say it's $50,000 that's owed by this joint return that was filed.
Okay.
And one of the spouses says, "Hey, I'm none of this is my problem.
Mm-hmm.
You know, I had a situation where we'll blame the guy because guys are normally the ones that do this kind of stuff." Anyway, so the guy...
You're probably right. Well, you would know. You do taxes.
So the guy just is having... It could be where the wife, he's just forcing her to sign the tax return.
Mm-hmm.
She may not know what's even in the tax return and probably doesn't.
Mm-hmm.
And so there was this pressure to sign the return even though she had no real knowledge of what was inside of that tax return. So that can be a scenario whereby she might be able to request equitable relief because it just isn't fair.
Yeah. Well, that's surprising with the government that they actually have a program like that, because you would think that they would think it was fair. She didn't read it, but that's a whole nother conversation. So what about, can you still be married, or do you have to be divorced in order to possibly qualify to get this relief?
Well, certainly being divorced helps any one of these arguments. And there's one, separation of liability, where you have to be divorced to request that. And that's basically where everything's split. This is the husband's, this is the wife's, and you must be divorced. Now, if you're not divorced, you might be after you go through this process, but it really, most of the time when there's some kind of innocent spouse issue going on, the marriage is on the rocks, or unfortunately it's been dissolved already.
Got it. So now in this relief, it's relief from taxes, penalties, and the interest?
It is. I mean, there could be the situation where...
Because a lot of times things don't get taken care of, and the further the time goes, the more interest that...
That's exactly right. I mean, basically, if you haven't paid your taxes for a period of time, just double the amount of taxes that you owe, and you're probably pretty close to the penalties and interest.
Wow.
But yeah, if the relief is in the form of everything, that is, it's in the relief of the taxes, the penalties, and the interest, if the IRS agrees with your position that you're trying to argue with them.
Got it. So again, Greg, if a spouse signs something, they're not doing their due diligence, and they didn't know what was going on, they could possibly still qualify for this.
They could. I mean, I worked a case where it was a very unfortunate situation because there had been spousal abuse.
Okay.
So the wife, just did it for her own safety. And oftentimes with these relief provisions, there is some kind of spousal abuse, and the IRS is very sympathetic to those situations. Got
it. Okay. So you're probably providing documentation and things to, to back that up. Yeah.
Documentation, affidavits, that kind of thing.
Got it. So Greg, how does the IRS actually define actual knowledge and reason to know? Looks like you got a definition right there.
I do. The idea is that, again, remember, these are legal terms, so things just sound so bizarre.
Okay.
And that is that the taxpayer should have had knowledge or could have had knowledge, then they have knowledge. So that's kind of a negative definition, if you will. So if a person signs a tax return and they didn't do their part in, asking the spouse, hey, what's in here? What are these deductions for?
Just what I was saying.
Just what you were saying.
Yeah.
And it could be that the spouse says, don't worry about it, honey. Just sign the return and get it in. That person did not have knowledge.
Got it.
Okay.
Yep.
If that person were to go through and understand what's in that tax return, they have knowledge.
Okay.
So it's really the situation, and this comes up too, is where one spouse is highly educated, very technically inclined financially, so they're the ones that are doing all the tax stuff.
Sure.
The other one might be a blue-collar worker, not college educated, and just trusts their spouse to be doing the right thing. So in that particular situation, again, that kind of shows, well, there might be lack of knowledge because the person just doesn't have the education.
Well, and for me,
to know.
me, Greg, I mean, I'm busy. I've got my mortgage practice. I own a software company. I do a radio show. I speak. My book's coming out. Because you're my personal CPA, and Dave takes care of everything. So
Yeah.
Dave tells me to sign it, I sign it. So is that if and I know Dave, you're listening, wouldn't do anything bad. But if would I qualify for that? Because I'm not doing my due diligence.
You probably would not.
Yeah, that's
because you're a professional woman.
Yep.
You're really good at what you do. You know about business and business practices.
Got it.
So you can't argue ignorance or naivety.
Okay, makes sense. So how might someone qualify for the innocent spouse relief?
This is an ordinary scenario, and that is under the equitable relief provision. So the husband and wife owe a bunch of money, $50,000, $300,000, whatever it is.
Well, let's hope it's $50,000, not $300,000.
Right. And they end up getting a divorce.
Okay.
So now they're living in two separate households. The IRS is sending collection notices to both of them.
Okay.
The IRS is going to try to levy the assets of both of them.
Of course.
And then the wife says, "Why? I had nothing to do with this. This was all my husband's doing." And so if it can be shown that the husband actually is the one at fault, that is, they're the ones that generated all the income, and maybe the wife hardly generated any.
Okay.
There was spousal abuse. In the divorce decree, it stipulated that the husband was responsible to pay all the taxes.
Yep.
All of those things help and are in favor of that wife requesting innocent spouse relief.
Got it.
And if she prevails, it could be a situation where she's not liable for anything.
Yeah. Okay.
Anything, because it could be a very severe financial hardship.
So you're really putting together a package and documenting why it should be fair for you. Then I can guess why you would not qualify. The example I just gave.
Right.
If you're not doing your due diligence, you're just signing just because you're leaving it up to your husband to take care of that. That's not going to help you out.
That's not going to go real well.
Anything else that's going to stand out that's going to prevent somebody from qualifying for the relief, Greg?
Right.
Yeah. Anything else or is that's mainly? I mean, if you can't prove one of those areas, you
got to be able to show that basically you were ignorant, you didn't have knowledge, and that the other party was the one that doing it all.
So let me ask you this, Greg: could both spouses? I mean, if let's just keep going with the man and use him as the example. He did the taxes, and the wife qualifies. Is there any reason that he would be able to qualify under the innocent spouse relief as well?
Here's how that works, and the IRS really does try to do this fairly, in my opinion. And that is, say the wife files for innocent spouse relief, for equitable relief. The IRS will then notify and provide a copy of that filing to the husband, so that he has an opportunity to read and to see what the spouse was saying as to why she should get equitable relief. And then he has an opportunity to rebut.
So he can appeal.
He can appeal.
Got it. Okay.
And again, he could appeal once the IRS comes down and says, "No, we're equitable relief. We say it is. Boom, Mr. John, you're going to pay for all of it." He does have the right to appeal that.
Okay. All right. So, Greg, if somebody's listening and is in this unfortunate situation, what are the steps that they should be taking? Obviously, time. I mean, you always talk about time, and we know that. And everything I bring in with all the experts, it's always about, you really don't want to procrastinate with anything. Things just get bigger and worse as you procrastinate. So first thing is to take action. And what is that first action? And
they do get bigger and worse. That is for sure. If you think you're in this situation, first of all, you have my sympathy, because I know it's a very difficult thing to be part of. But if you are feeling as though you qualify for some kind of spousal relief, contact a professional, hopefully me, that can really guide you through the process, someone that you can tell your story to, that can evaluate what the facts and circumstances are to help you determine, well, can you really qualify for it or not? It's getting help. That is just the key thing. You got to get help.
Yep.
Oftentimes emotions are just kind of screwed up and running around in the head kind of funny. And to have someone that's a professional to listen to it and to really know what's going on can be a fantastic help.
Yeah, so the first step is take action, and taking action is to call an expert, and that's why I have the show. That's what the show is all about, is bringing in experts in every field that can assist if you happen to be in that space, in that situation. So that's why Greg's here. Reach out to him. So let's say that somebody is denied for the in-spouse spouse relief. Can they reapply for it, or is it a one-shot deal?
If the request is denied, they have appeals rights.
Okay.
And that can be appealed then to the appeals officer at the IRS, and you can present your story of the facts again.
Okay. All right.
And again, if you hire a good professional that's persuasive and helpful in communicating
can
with
really
the
help
situation,
put that package together.
they can really be helpful.
Yeah, it's kind of like getting a mortgage. I mean, you can package a mortgage to favorable on the compensating factors, or not do a good job as a mortgage professional, and you may not have the same result in the underwriting approval. So, Greg, another related relief is the injured spouse relief. What is that? You got a big smile on your face. Why is that?
It's so
You're
funny,
chuckling over there.
Words that are in law. You have innocent spouse, and then you have injured spouse. And injured spouse sounds like someone got hurt.
Exactly. That's what I thought.
But that really isn't it. Think about it this way.
Okay.
The innocent spouse rules relate to post-marriage issues.
Okay.
The injured spouse relates to pre-marriage issues. Here's what I mean. Husband owes $50,000. Again, we'll pick on the guy. Sorry, guys.
That's
but,
okay.
If you got
You're a guy, so you better be picking on the guys and not the girls.
That's right. And man up.
I can pick on the girls.
There you go. So he owes $50,000 and before the marriage, and he gets married. So now they file a joint tax return. There's a $20,000 refund coming.
Okay.
The IRS ordinarily would apply all of that $20,000 refund toward the husband's tax obligation. So the injured spouse is that, wait a minute, by doing that, I'm getting injured financially because that was my lovely husband's liability before we got married.
Got it.
So then you file for injured spouse relief so you can get your fair share of that refund.
Makes total sense.
Regarding all this innocent spouse information, and those that you have been listening, you probably know now more than the average CPA. And I'm not picking on my profession. It's just an area that takes a lot of knowledge and understanding of how this thing works. So whether it's you or a friend or a family member, have them seek help.
Great disclosure there, Greg. Thank you. So if you're listening and you need an expert in the tax arena to keep yourself out of trouble, Greg's your guy. That's why I invite him into studio. If you are in trouble, you definitely need to get professional advice, and Greg can assist you there too. Call the show at 1-855-400-1150 or go online at themoneyhour.com. Greg, thanks again for visiting me in studio and sharing your wealth of information.
Tina, thank you so much for having me.
Coming up next in the Money Hour, how do you buy a HUD home for pennies on the dollar? We have Larry Goins with the Goins Group LLC right here on 1150 AM KKNW after this short break.